We are going back, and it's risk on for U.S. assets. 30 minutes until the start of trading. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld. Our special coverage of election 2024 starts right now.
And coming up, a decisive victory. Donald Trump stages one of the most dramatic political comebacks in American history.
From the dollar to stocks, everything in between, the Trump trade erupts across financial markets.
And Republicans win control of the Senate, giving the GOP powerful leverage in tax and spending battles. The House still a question mark. All of that and more coming up. But let's take a look where markets are trading and that Trump trade underway. You can see in risk assets, we are just screaming higher right now. The S&P 500 up about 2% pre-market. Big tech participating, but not as much. But even still, the NASDAQ 100 up about 1.7%, 30 minutes before the bell. All the action is in the small caps. It's pretty amazing. You see the Russell 2000 right now just absolutely ripping up nearly 6%. You think about the biggest sectors here. We're talking financials, we're talking healthcare, and that's what's in the limelight today. But of course, it's a cross-asset story as well. We go to the bond market, and we see 10-year yields up 18 basis points on your 10-year Treasury yield. We are knocking on the door of 4.5%, of course. Investors betting that, of course, a Trump administration will mean more spending, more tariffs and lower taxes, and maybe more inflation. Meanwhile, you take a look at the VIX. Of course, we had seen that run up in the run up to the election, but now some volatility coming out of this market. Your VIX below 16, and gold, obviously not a big search for havens right now. Gold down about 3%. Matt, I haven't even gotten to currencies.
Yeah, I think currencies really show the domination of the U.S. dollar against our trading partners. Take a look at this chart. This is the WCRS chart on the Bloomberg terminal, and you can see that against every single major currency, we're seeing huge moves for the greenback. The Mexican peso absolutely devastated. And the euro, by the way, its biggest drop that we've seen since at least the pandemic. So huge moves here, and a lot of banks are calling euro parity soon.
Yeah, it's incredible to me that even with those drastic moves, those banks, trading firms are seeing more pain for the trading partners ahead. In addition to sectors, we're going to talk about certain stocks moving this morning. Watching DJT rising now more than 26% pre-market after Trump won the election. The market cap has been testing that $10 billion mark. Also watching Tesla now up almost 12% pre-market. Higher because, you know, it's Elon Musk, of course. I think super genius is what he was called. Helped propel Trump back into the White House. Finally, Coinbase up double digits on the hopes that a Trump administration will welcome crypto adoption. Coinbase now up almost 13%. Bitcoin flirted past that $75,000 mark. And Senate also, Matt, has a lot of pro-crypto candidates in it as well as it turns red.
Yeah, absolutely. I'm watching very closely the House races because if the Republicans can keep the House, you have a full red sweep and they can enact the kind of tax legislation that Donald Trump wants to. They can roll back things like the Inflation Reduction Act. And as a result, I mean, that's why we see, for example, the 30-year bond, the long bond right now, posting its biggest drop since 2016.
Yeah, a big steepening underway in the yield curve. And it's interesting that you're seeing this big risk-on move, even though investors have been telling us for months that they want a divided government, but obviously not holding back any markets right now. And it's interesting. We talk about this Trump trade. It took off at 7 p.m. last night. We know that the prediction markets, the betting markets front ran this move, but even in the traditional financial markets, before we had any clear results, we were ripping.
Yeah, what's incredible to me is you saw that move really take off at 7 o'clock, and then you also saw it extend quite drastically, even throughout the course of this morning, the 10-year alone just hitting almost that 4.5% level. My question is, if you start to hit those levels, how much do you start to have a new narrative here? Decoupling here from the realities that we had faced in the past. Why that move we're seeing, I think, is something we should be exploring throughout the course of this show.
And when do you see dip buyers? We had auctions yesterday. I mean, life still goes on, even though it's a presidential week. People showed up, investors showed up at those treasury auctions, but you're not seeing it necessarily right now.
If you were gutsy enough to short the 10-year in September, can you imagine how much money you've made?
Yeah.
Yeah, absolutely. And we have an auction today as well, 30-year auction coming up at 1 o'clock this afternoon.
Yeah, that will absolutely be
Is there a
closely
meeting tomorrow?
watched.
Is there
There's a Fed meeting
gathering?
tomorrow. I hear that Fed officials are meeting in Washington right now. Their two-day meeting kicking off a decision tomorrow. But let's get back to the news of this morning. U.S. President-elect Donald Trump spoke from his campaign headquarters in West Palm Beach, Florida, earlier today.
I will not rest until we have delivered the strong, safe, and prosperous America that our children deserve and that you deserve. This will truly be the golden age of America. This is a magnificent victory for the American people that will allow us to make America great again.
And let's stay in West Palm Beach now, where Bloomberg's Felipe Marquez has been following the Trump team. And Felipe, I see you're back in your hotel room right now, but we were talking about how that Trump trade took off at about 7 p.m. last night. When did celebration start in Trump HQ? When was it apparent that they were confident they would win?
I think it was a little later than 7 p.m. People trickled down all night. I mean, I stayed through the end of it, through the end of his speech. I think it was really the turning point when we started seeing some of the results for Pennsylvania. We started seeing him like with a solid lead on some of the swing states. I think that's when you could feel the room being charged. Also, another important thing is yesterday there were two different parties. There was one party in Mar-a-Lago and there was the Convention Center party. At one point they unified. So when people were brought together, you can see the temperature in the room change.
All right, Felipe, thanks very much. Felipe Marquez has been up all night reporting from West Palm Beach, Florida. Hopefully you can get some sleep. Let's bring in Jay Hatfield right now. Hopefully well-slept and refreshed, founder and CEO of Infrastructure Capital. Jay, what's your take, first of all, on the resounding win from Donald Trump? It's really an historic victory.
Good morning, Matt. It's great to be on. Well, absolutely. It reminds me of the Reagan sweep. And I think the policy changes will be almost as profound as that development. We, however, were bullish on the election because of the math in the Senate. And so we initiated, to demonstrate that, we initiated a target on the S&P next year at 6,600. But this red sweep to us implies a cut in the corporate tax rate. We're estimating 18% effective, so it might be through deductions. So we're raising our target to 7,000 next year, at the end of next year, which pre-open would be up 20%. So we think it's highly bullish. It's a rejection of the socialist policies that were pursued under the Biden administration, super bullish long-term. And also keep in mind, we do have a Fed loosening cycle and an AI boom. So it's really a troika, and we're hyper bullish on the stock market.
Jay, one interesting thing Katie and I were just mentioning earlier was the extension of the trades as the morning has gone on, and it became more clear that the Senate would be red. The House, of course, is still in balance. But you look at the bulls underpinning the stock market and the bears underpinning the bond market. And you have to wonder, at what point do those things catch up to each other next year?
Thanks, Sonali. Well, that's really our biggest non-consensus call. I mean, obviously, everybody agrees with our view that this is bullish for the market, or even super bullish for the market, with the small caps up 6. But we think that after elections, most of these trades get overdone. A good example is solar stocks surged when Biden became president and then fell off 65%. So we think this Treasury sell-off is massively overdone. We don't think the Trump administration is worse for the budget deficit because it's pro-growth, number one. And maybe they don't do it, but they're talking about actually cutting spending. So we actually think it's better than a Democratic administration. And everybody ignores monetary policy. There's global rate cuts going on. This Fed is super tight. The monetary base is declined actually almost 1% over the last year. And inflation is headed to 0 in our models.
Interesting.
So we have a total non-consensus call. And we agree with you, though, if rates keep rising, the housing market's going to roll over, the economy's going to slow. And by the way, our target starts to look ridiculous because our 7,000 assumes, or even our 6,000 at this year end, assumes a 350 Treasury. So at 450, the fair value would be down like 1,000 points.
Jay, let's talk about inflation headed to zero in your models, because you think about the argument for why yields are screaming higher at the long end. It's because inflation is going higher. But an interesting note out from Neil Dutta this morning saying that, you know, gold is down, so is oil. Maybe inflation isn't that huge risk that everyone is worried it is right now. It seems like you would agree with that argument.
Well, absolutely. And we've been far more accurate about predicting inflation than the Fed has. I think Matt knows this because we have a simple model. We look at the 70s. Inflation is almost exclusively driven by loose monetary policy. And I mentioned we actually have a shrinkage of the monetary base and oil price shocks. We also have very low oil prices and ultra low natural gas. Plus, we just mismeasure inflation because of shelter, but that's finally rolling over. So if you mark inflation to market, using shelter, market rates for shelter, PCE core is below 2, headed to 0. Autos are rolling over. That's a huge portion of the inflation right now. Last 12 months is auto services. So we think our models is what really works. You normally don't need to focus on monetary policy because it's relatively stable. But during this cycle, it's been highly volatile. It created the inflation. It tamed the inflation, and it's continuing to tame the inflation with the monetary base not growing at all.
I mean, you referenced my knowledge of your inflation forecast because I'm a fan of your index. CPI-R is accessible on your website, infracapfunds.com, and I think it would behoove a lot of people to check it out. What about the policy that Trump has campaigned on, however, Jay? I mean, do you not believe he's going to wrench up tariffs as much as he has threatened? Is that just, you know, a real estate guru's first bid? And do you not believe he's going to have mass deportations, move 15 million workers out of this economy? Because if those two things happen, you've got to believe inflation is on the up and up.
Well, you know, first of all, rally speeches are not policy, so we'll see what actually happens. But particularly with tariffs, I think people are way too negative about tariffs with regard to inflation. Inflation is ongoing increases in pricing. Tariffs create a one-time increase. There is revenue. It's really a partial sales tax, which is very bullish for growth. If you tax consumption and cut investment taxes, that's super bullish for growth. We saw that in 2017. So this whole notion that tariffs alone are going to increase inflation is inaccurate, particularly if you don't specify what's happening to the proceeds from the tariffs. And mass deportations, a lot of the recent immigrants aren't even allowed to work. So I'm not confident I wouldn't assume that that's going to be highly inflationary either. And it's also difficult to execute on. So we think that's all overblown, that I wouldn't ignore 56 trillion of pension assets growing at 5.5% globally. There's going to be a massive rebalance at the end of this month and quarter because the Treasury market has crashed, really. Stock markets have surged, so the rebalancing will occur. So there's a lot of bull cases for bonds that nobody's discussing, which makes sense because the obvious short-term trading is to trade on the red wave. But we're longer-term bullish, and we've made these kind of calls. We made the call when Treasuries were at 5. And we saw the data path, and we see a similar data path where inflation is going to continue to cool. Housing market's probably going to cool if we stay where we are now. So we're confident in that call, but it's highly non-consensus.
Jay, we thank you so very much for joining us today. That is Infrastructure Capital's Jay Hatfield. Now, among the many sectors moving today, we're going to check on the banks pre-market because you're seeing some stunning moves in the shares of Goldman Sachs, JP Morgan, for reasons that we've talked about before, that steeper yield curve being one of them, but also the prospect of lighter regulation as you see key Senate races flip, as you see the White House also turn red, and the House still in balance, rather. Fascinating, of course, expectation of more M&A as well into next year. We'll talk more about it later in the show. But coming up next, we're going to dive deeper into the battle for Congress. Democrats are struggling to maintain their power in Capitol Hill. This is Bloomberg. after losing the White House and the Senate, the House race is still open in Washington. Here's a look at the races with Zach Cohen. He covers Congress for Bloomberg Government. What is still in the balance, and how long will it take before we know the real outcome?
Certainly the fact that Republicans slipped the Senate is a major victory for that party. They'll have at least 52 seats in January, with victories in places like West Virginia, Montana, and Ohio, which will give them the power to move any number of incoming President Trump's nominees for the executive cabinet agencies, as well as for the judiciary, where they had a lot of success during Trump's first term remaking the federal bench. The House is going to take a little bit more time to call. There's a number of outstanding races in places like California, which notoriously counts its ballots very slowly. The same goes for Arizona. I've been watching in particular a border district that is too close to call at this juncture, as well as one for one of the tax writing committee subcommittee chairs, David Schweikert, waiting to see how that race gets called. And so it could take a couple of days. It took over a week, in fact, for Republicans to learn that they had flipped the majority in 2022. And we could take a number of days before we know whether, in fact, Republicans have won complete control of Washington next year.
You know, we thought last night would be a tough race to call, Zach, and it was pretty clear by the time I went to bed at 10 o'clock that Donald Trump was going to win. At least you could see in the betting markets that, you know, buying Kamala Harris only costs you 7 cents and you win $1. So can you tell in that way, can you see from betting markets, from financial market reaction, where it's going to go?
Well, certainly the presidential race always has a key impact on the down ballot effect. You know, the Senate map has always been tilted toward Republicans. Republicans have been very confident that they would actually flip the Senate majority because Democrats had the narrowest of majorities and were defending seats in states that Trump had won previously. The House, part of the reason why it's taking as long as it is because some of these races are being called in states or in districts, rather, that either Biden carried in 2020 or are some of the main battlegrounds in the states. You know, Michigan remains uncalled, for instance. And so how voters go to the polls and then vote not just for president, but also for the House has an impact down ballot and ultimately gives the next president either a very wide or very narrow latitude to implement their legislative agenda.
All right, Zach, really appreciate your reporting. I know there's still a lot of work left to do. That is Zach Cohen of Bloomberg Government. Meanwhile, let's talk about where the markets go from here as a result of this election. We'll break it down now with Bloomberg's Alex Semenova. Alex, I want to start with the small caps. The Russell 2000 absolutely ripping higher. Some of this must come down, of course, to the makeup of the index. You think about financials, healthcare having a big representation in that index. But talk us through the small cap trade, the bull case right now.
Yeah, so an astounding move really on that index, up as much as 6% in futures trading. And of course, this has to do with, Trump's proposals of deregulation benefiting some of these smaller companies. But a really important thing to note as I'm talking to strategists this morning is that this burden of financial costs that small cap companies face isn't suddenly going away overnight. So this move is more of kind of a temporary knee-jerk reaction to us clearing this hurdle of uncertainty, to investors getting a winner much faster than they anticipated. And also small caps have tended to do well in the weeks after elections. Data from Jefferies actually found that the Russell 2000 index has advanced an average 7% in the 8 weeks after an election decision in election years. So,
well, we did that in one day. Not even before the market opened, we've done it.
That's for now, Matt. We'll see what happens, though, as kind of reality hits. And of course, the move higher in yields could potentially be a problem for
bring that over to the large caps as well, because if you're an investor trying to choose and you're choosing on valuation here, you have those same worries, as you mentioned, about the small caps, about the leverage, especially when you look at where the 10-year's going. But what about the large caps and maybe a lesser threat here of regulation among them?
Right. So we're seeing actually big tech is performing slightly, not as good as some of the rest of the market is today. It's lagging, actually, yeah. And that's because we're seeing this rotation into sectors like small caps, which often comes at the expense of some of the winners, some of the leadership that we've seen for much of this year. So investors really exploring other areas right now. Up until recently, tech has, of course, been a defensive play. Investors have been piling into that sector kind of because they're familiar with it, because of the sturdy balance sheets. But now it's more of risk-on mode.
I think you bring up a great point in terms of rates. I mean, this rally is fun to watch for sure. But if rates stay this high, just like Jay Hatfield was saying, and just like you just said, it's going to be a real problem for these small caps.
Well, inflation's going to zero in his model, so maybe not higher for much longer.
Exactly. Well, I mean, look, why would we rally this high on an index that has so many money-losing companies? They need to borrow money. Anyway, Alex, great to have you on. Thanks so much for joining us. We're going to continue to focus in on the reaction in markets to the Trump win. We're seeing a huge rally in stocks. We're seeing a massive rally in the dollar. We're seeing yields soar across the curve. And really, the long end is where you see it the most. So a big steepening as well. It's been a pretty incredible set of results to watch post-election.
One question I have is, where do those tax cuts matter the most as well? Because that's what people are starting to factor in a little more as well. Now, more markets and election coverage heading up to the opening bell. Stick with us. This is Bloomberg.
All right, welcome back to our special coverage of election 2024. Of course, Donald Trump is the new president-elect, and you take a look at how markets are reacting, and it's a risk rally. You can see it in the S&P 500 up over 2% pre-market. Interestingly, the Trump trade isn't a big gain for tech, at least relatively speaking. Of course, the NASDAQ 100 up by about 1.7%. A lot of bulls would not say no to that, but that's not what's leading. The star of this show, of course, is the small caps. The Russell 2000 currently higher by 6% pre-market. Our conversation, of course, was just on how long that can last. Typically, you see small caps rally after an election, and that's certainly what you're seeing now. Of course, you take a look at the cross-asset action, a lot of action in the bond market, a big sell-off underway. The 10-year Treasury yield up 20 basis points, volatility draining out of the equity market, and not a haven bid to be found. Not in the bond market and not in gold either. Gold down about 3%. We'll talk about all these moves coming up with Stephanie Guild joining us from Robinhood. This is Bloomberg.
A stunning victory by Donald Trump and potentially a red sweep this morning, driving assets in a risk-on fashion like you never would have believed it. The S&P futures are up 2%, but we have Russell futures up almost 6%, the biggest move in the 30-year bond since 2016. Bitcoin at an all-time high. It hit $75,000. It's unbelievable. That was the opening bell. You see the Academy Geopolitical Intelligence Group down on the New York Stock Exchange. I'm looking for Peter Cheer. I think that's his gang down there. In any case, they're ringing the bell there. Down at the NASDAQ, you've got Tipro ringing the bell, but no one really cares about any of that. It's all about this face-ripping rally, Katie Greifeld, that we're watching in risk assets.
Yeah, let's put some numbers to that face-ripping rally. On the S&P 500, up nearly 2%. Of course, just 30 seconds into the trade. You can see big tech sort of lagging here, but still up 1.7%. The star of the show is your small cap space. The Russell 2000 currently higher by about 4%. We got higher than 6% at one point pre-market. This, of course, is a trade, a dynamic that started at 7 p.m. last night, clearly maintaining its momentum and building into the cash trade. And as such, let's talk about DJT, of course, surging on that Trump win, up 25%. This company actually reported earnings yesterday. They're still losing money, but of course we know that that's not what this stock is trading on right now. DJT shares currently up 26%, Sonali.
Right off the highs, but still on top of a 94% surge this year. Also watching Tesla here, up 12.7% as the market opens. Remember, Elon Musk is seen as a major beneficiary of Donald Trump's return to the White House, has been a huge supporter. We'll talk about that more in the show, Matt.
Yeah, absolutely. A focus point, because Elon Musk, donated, I imagine, at least as much as any other massive non-American billionaire to Donald Trump's campaign. And yet Donald Trump doesn't seem to really care much for EVs. I wonder how he feels about weed. Tilray is a pot company that is actually almost decimated today after Florida voters rejected a ballot measure to legalize recreational marijuana. You can see the drop now almost 10%. Let's take a closer look at some of the election stock moves with Bloomberg's Abigail Doolittle, because there's a lot to watch, Abby.
There really is. It's pretty stunning in terms of the moves that we're seeing. A real risk-on rally. Markets love certainty, and now they know who the 47th president of the United States will be, Donald Trump. Stocks higher, the S&P 500 up 2%. The Russell 2000 at the highs had been the best day in more than a year. Take a look at Bitcoin, record high, up 7.4%. And then bond yields surging higher. That means bonds are lower. And that, of course, all of this really not just a reflection of certainty, but that Trump trade, the idea that Donald Trump's economic policies will be helpful to the economy, protectionism. Speaking of protectionism, let's take a look at the dollar, because as we do have yields going higher, this supports the dollar going higher. In fact, the highest level going all the way back to 2020, which is really pretty interesting in a way, because that, of course, at that time, right before, actually, I'm going to back off of that language a little bit, but at the highs, the most since 2016. So another presidential year, each year, election year, this is the highest that the dollar has been. And again, that protectionist attitude from Donald Trump and his upcoming administration. If we take a look at some of the individual movers that all of you have already been talking about, DJT up 24%, the best day since it started trading on the NASDAQ. Tesla up 14.4%. Elon Musk, of course, a big part of the campaign, possibly some part in the administration. He could benefit from regulation around the robo-taxis, the AI infrastructure, and then banks. Sonali's been all over that. And then, of course, aerospace and defense. There's not a lot of corners of the markets that aren't doing well. Again, a big risk-on rally as Donald Trump is elected the next president of the United States.
And as such, of course, DJT currently halted for volatility. Abigail Doolittle, thank you so much. The S&P 500, of course, your big benchmark, up in a big way, hitting an intraday record high. Let's broaden out this conversation right now and bring in Robinhood Financial Head of Investment Strategy, Stephanie Guild. She's with us now at the desk. Great to see you in person. So let's talk about, of course, the trading on Robinhood's platform. You have a really unique view into the retail trader, what they're trading, and looking at your platform, you had your biggest ever overnight session. What were people trading?
So I would say that it was BAU until the overnight session, and then it was the things that we've all just been talking about.
BAU?
Sorry, business as usual. So our customers.
I thought that was an ETF, and I was just wondering, what's BAU?
No, I mean, I just mean our customers tend to, trade sell trim winners and buy things that go down, and they were doing that up until the overnight session, and then you saw a lot of the trading going towards the stocks we just talked about, DJT, Coinbase, Tesla, and we had our election contracts, which we were watching very closely. So we had 11 times the normal amount of volume overnight, and it is an overnight record for us.
Well, those election contracts also quadrupled pretty quickly, didn't they?
Over 400 million election contracts traded. And I will say that by around 9:30, it was 85-15 Trump.
So you knew by 9:30 pretty much, and we were seeing this really, I was seeing it across betting markets, watching a worksheet on the Bloomberg. Where did you see the most action in terms of assets other than stocks, right? Because stocks, I'm imagining, are the most traded asset on your platform.
Crypto, for sure. That was also a record. And then these election contracts were just like a unique, opportunity for our customer base.
And Robinhood got those out just in time.
Just in time, October 28th.
There you go. So it's interesting. You take a look at the knee-jerk reaction here. It seems like risk on everything, sell off bonds, sell off, of course, oil and gold as well. Do you think that that's the right play here? Where are we getting a little bit over our skis?
I think the one area of concern that I see is that the fact that 10-year is up so much and small caps are up so much. Like, those two things don't tend to go together. Small caps tend to have a lot of debt on their balance sheets. And while, this is, I think, just a focus on the fact that Trump is a domestic president, a domestically focused president. And so that's obviously lifting small caps. They tend to be more cyclical in nature. And so that's why I think you're seeing tech not rally as much. But the one thing that I'm most concerned about is the fact that the 10-year is going up so much. And I think that's going to be the single biggest issue for this president, is dealing with our deficit.
Well, let's put a little bit more color on that. The fact that you do have these two unsynchronous moves right now. Of course, this scream higher in long duration debt, but at the same time, you have these smaller companies ripping higher. Why doesn't that work? And which do you think actually corrects here?
I think it could be small caps that end up correcting here, because I see a lot of reasons why the 10 years should go up, especially with the fact that we have a $1.8 trillion deficit. And even if more tariffs come into play, like the Trump tariffs from 2016 time period, his last presidency, we made $80 billion last year from that. Like, that is not going to necessarily fill a $1.8 trillion gap. And so I feel as though if rates do not somehow pull back, and maybe a strong dollar helps that a little bit from an inflationary perspective, it just feels like everyone has to get their debt in order, including small caps.
I also want to talk about here the difference between the retail trader and the professional trader, because incredibly, if you look at the S&P 500 right now, you're seeing financials leading the market here. You're seeing the KBW Bank Index having its biggest gain since 2020. But when you look at what was being traded on the platform, crypto, that's kind of like anti-bank, isn't it, in some ways? Or, those bigger indexes, SPY, QQQ. That's even different from what you're seeing in the Russell. At what point does the retail trader take a cue from the broader markets, or do they want to do something else on their own?
I think, honestly, overnight, it was really just based on the election, like extremely election, Trump, Elon oriented. I think what comes beyond that will end up being a little bit differentiated. I don't know about, we historically, if you look at like our Robinhood Investor Index, you haven't actually seen banks be a prominent piece of it ever.
If you Google JP Morgan, people ask the difference between Morgan Stanley and JP Morgan still. Not joking. It's one of the top things that come up.
Yeah, but nobody who's involved heavily in trading, right? I mean,
well, the retail trader, how much do they understand the bank's trade?
If you digest financial news, then you aren't Googling that.
Yeah, you're not. But if you're trading and just getting involved in the market for the first time, I think you have to ask the question.
I think they're investing in what they know and what they see for the long term. And I think they see, like, banks will be here for a long time, but crypto is sort of a new thing. It has a lot of volatility. If you're trading on a regular basis, volatility can be actually a helpful thing. And that's what I think they see. It's all coming back to like electric vehicles. And, again, those long-term things I think are not going to go away necessarily.
So I wonder, I'm not sure if this has changed by this point in the morning, but I heard Kriti Gupta, our reporter out of London this morning, saying that most major world leaders have called to congratulate Trump pretty enthusiastically, with the exception of China, Iran, and Russia. And I also noticed that, most stocks earlier this morning were up. European market has turned lower, but China was down. What do your traders make of, the Trump opponents like China? I mean, are they selling Chinese equities?
They're doing nothing with China.
Yeah.
I think the one aspect that they're probably, maybe they'll have to start to think about is the fact that so many of the companies that they do invest in are very global in nature and have a high percentage of their revenues coming from a place like China.
Right.
And so that's something that has to be contended with. And I think that's why you're seeing like NASDAQ up not as strong as other things.
Yeah.
But that's like, generally I'd say that if our customer base is investing in the things that we saw them invest for the election and prior to that, then they're not really like caring about China at all.
Yeah, some of those investors might get a crash course in tariff economics, but I'm glad you brought up big tech because it is interesting and it's very early, but big tech is the laggard in this market. Of course, there's a lot more focus on areas such as financials, healthcare, more of those value-oriented plays. Do you think that that's a sustainable dynamic, or do you think big tech will come back?
Right now, it's probably a reaction to the China thing, but I actually think if the general rhetoric of deregulation comes to pass, and that is helpful for a lot of the large companies that are under pressure because they are so big.
Right.
Stephanie, great to have you in here. Great to get your reaction overnight, and amazing trading on the Robinhood platform. 11 times your average and the most you've ever traded overnight. Makes sense after such an historic event. I just want to point out also that if you're looking at European stocks, I was talking with the group this morning about how interesting it was that everything was rallying, right? We saw U.S. stock futures up, but we also saw, with the exception of Spain, all European indexes rallying as well. This could be, though, pretty bad news for European companies, right? Especially if Trump really enacts tariffs, especially if you see a huge dollar rise over the euro and even the Fed reverse. Take a look at the Stocks 600, which is the broad benchmark index for European stocks, it has now turned negative for the day. After being up at one point to 519, we're looking at 509, so a pretty decent drop.
Yeah, it's interesting, and it sort of tracks with what we were seeing in the currency market, for example. You know, the dollar has just been so dominant. We're now on parity watch again for euro dollar here. So it took a little bit for the stocks to get into sync here. But as you can see, those gains steadily disappeared, and now we're back to negative.
Now, maybe this is a minor point, maybe not, though. If the House does not turn completely red, then how stiff are those tariff policies going to be?
Well, tariff is one thing for which he does not need the House, right? He can enact tariffs as the executive.
Unilaterally.
Yes, and does not need congressional approval. What you need the House for, as far as I understand it, and I'm no expert on this, right? But we've been talking about it every day.
Yeah.
Exactly. What he needs the House for is obviously the tax cut package to extend those 2017 tax cuts and hopefully get rid of the SALT cap. And then he also needs the House to do, I think, any major immigration action.
Yeah.
We're going to continue to focus on this. Obviously, it's an historic upset, an historic victory for a candidate that faced probably tougher odds than any presidential candidate in history. Coming up, what happens to Elon Musk's Tesla and EV markets in the Trump administration? Well, today, the markets think this is a good thing. Maybe he bought some decent policy help from Donald Trump with massive, massive donations. This is Bloomberg. Elon Musk played a crucial role in Donald Trump's return to the White House. The Tesla CEO is arguably the most prominent supporter of Republicans this election cycle, and Trump has called on Musk to slash U.S. spending. Bloomberg Technology co-host Ed Ludlow joins us to talk about, well, how much money Elon Musk gave and what kind of influence, Ed, that's going to buy him. Shareholders certainly think that it's going to help out with his biggest company, Tesla. Those shares up, I think, 15% in early trading. Right. But Donald Trump doesn't seem to love EUVs historically. So what gives?
Yeah, I mean, there's still a lot of math to be done long term. Elon Musk will find out if the $130 million he threw behind now President-elect Trump will pay off. You know, the tension is in the policy platform, right? That most forecasters would say that the Trump administration will repeal or pare back or adjust the terms of the Inflation Reduction Act and other pieces of legislation that were designed to subsidize or incentivize EVs at the consumer level or at the manufacturing level. Contra to that is the idea that Trump wants to support manufacturing in the United States. If there's to be some policy adjustment as it relates to corporate tax, it will come with conditions tied to domestic activity. But the immediacy is like, Musk picked the right candidate, right? I think that's what the market's telling us. And yeah, we know.
You know, another interesting move in the market here, of course, is when you think about what Musk was saying, not just at Tesla, but how popular X was overnight.
Yeah.
One interesting move I see today is actually of the Mag 7 stocks. Ed, Meta is down today.
Down.
Is that a direct reaction?
Well, remember Trump's comments throughout this election cycle, specifically as it relates to TikTok and Meta. You know, the assumption, and again, I use the word assumption purposefully because we don't know the answer to a lot of this, but that Trump would be more friendly towards TikTok in this country and focus more on Meta. He's called out Mark Zuckerberg in that respect. X, really interesting. You know, the company puts out this data set that shows that there are more Democratic Party affiliated users on the platform than there are Republican users. The company, when it comes to X, you know, it's been very influential. Musk has used it as his platform to talk about this election, right? What I can tell you is that the business is still not back to pre-acquisition levels. Advertisers have come back, but Musk is still, actively involved himself in meeting advertisers to try and bridge some differences of opinion. But the advertisers, even if they're back talking with X, they're not spending in the same way. So that's going to be an interesting company to track, even if it's private.
Let's get back, of course, to Tesla and the EV space. It's
Sure.
interesting. You take a look at Rivian shares right now, down about
higher, right?
8%. No, Ed, they're down 8%.
Down, sorry.
They report earnings tomorrow, of course, but it just seems like a nice pair trade, of course. What's good for Elon Musk and Tesla might not be great for Rivian.
You're right, down, and I think I'm right in saying that maybe Ford was higher and GM modestly higher. I think Matt was talking about this with your last guest in the last segment. Look at the European automakers in that session being lower when at the index level, I think Europe had a decent session so far, right? Very hard to unpick what's going on. But again, the calculus is the same. There may be some repeal or pullback on specific features of legislation that are directly incentivizing to the consumer or the manufacturers. The main thing that most accept is that Trump will move to make American industry more competitive. And so Tesla may be the principal beneficiary of that. Then there's the unknown thing. I think we should say this out loud, right? Does Elon Musk being closely aligned with Trump and having some formal or informal role in federal government help Tesla's biggest rivals? Impossible to answer that question. I think that the market would say Tesla would benefit from those policies that we've just discussed and outlined. The EV market as a whole, maybe not.
Ed, we thank you so very much. We're looking forward to keeping up with everything you find out in the Musk universe. That is Bloomberg's Ed Ludlow in San Francisco. Now, coming up, we're going to talk about how hedge funds have been preparing for a Trump return. That's up next in our Wall Street Beat. This is Bloomberg. It's time now for the Wall Street Beat. Overnight, we saw a historic Trump victory, with Harris losing ground in critical counties and swing states compared to President Biden in 2020. The Senate is also going to be red. We're going to take a look at how hedge funds have been positioning for a Trump administration. Bloomberg's Hema Parmar joins us now to talk about it, because we were talking a little earlier about how that Trump trade really started infiltrating markets early into the night before you got all the voting data. You've just seen it accelerate quite meaningfully, particularly in bond and currency markets. When you speak to hedge funds really across the globe, I know your team has been, what are they finding?
Yes, so they've been really gearing up, all hands on deck across the biggest hedge funds trading across all markets, fully staffed, and a number of funds were really double and triple checking their systems, making sure that they were ready for a spike in trading volume. When it comes to their positioning, there was a sense of being a bit more risk off. And from the people that I was talking to throughout the evening, by about 7:30, it was still kind of a mixed bag. People really didn't know which way it was going to go. Or people who did, there were multiple people with opposing views.
And talk us through the relationships between, of course, Trump, the Republican Party, and also Wall Street and some of the world's billionaires there. Bill Ackman comes to mind. Have to imagine some victory laps being ran today.
There's a lot of crossover between the Republican Party and big names in finance, of course, and in the hedge fund world. Bill Ackman, staunch supporter of Trump. You see that also in a number of other names. Ken Griffin, longtime Republican supporter.
But
not to Trump. Yes, yes, precisely. Yes, he gave a lot of money, tens of billions of dollars to the party, but not to Trump himself.
Interesting.
We've seen that as Steve Schwartzman, a big Republican donor. So you do see that across the board. There are some names that are up for potentially Treasury Secretary, Scott Bessent, John Paulson. So we're very, very interesting to see how that all pans out.
Remember, Bessent was the one that floated the shadow Fed idea, too, so that will be a big discussion in the coming days.
Right. I mean, we've had a shadow Fed before. I used to interview Alan Melcher on this program all the time. Not this particular program.
Right,
right. Hema, thank you so much for joining us. Will be fascinating to see how this works out for a lot of those hedge fund and how it works out in general for asset managers if you get the rollback in regulation that Trump has promised. Bloomberg's Hema Parmar there covering the Wall Street Beat for us. Coming up in the next hour, Ralph Schlosstein, Evercore Chairman Emeritus, is our special guest. We'll ask him his take on when Trump enacts tariffs, what kind of tax legislation we get, and also what happened. Why did the Democrats fail to win the popular vote for the first time, I believe, since the first George Bush. This is Bloomberg. It is an historic day. We are going back 30 minutes into the trading session. Welcome to our continuing coverage of election 2024. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld.
And coming up, world leaders and global CEOs prepare for Trump 2.0. We're going to take stock of the global impact from trade to Ukraine and the Middle East.
One of Wall Street's most high-profile Democrats weighs in. Ralph Schlosstein of Evercore breaks down what's at stake and what went wrong.
And one sector to keep an eye on, Big Pharma. We'll hear from the CEO of Novo Nordisk on GLP-1 supply and demand, and also what a Trump presidency might mean for the drug maker. All that and more coming up, but let's take a look at markets right now, and let's take a look at that Trump trade. Still underway, maybe coming back a little bit here, but the S&P 500, the NASDAQ 100 still up about 1.7%. All the action in the small caps right now. The Russell 2000 higher by 4%. We were looking at numbers closer to 6% in the pre-market trade, but still quite a sizable lead here for the little guys. It'll be interesting to see how sustainable that is. Let's take a look cross asset though, because a lot of action underway in the bond market, a huge sell-off on our hands when it comes to the long end of the Treasury curve. The 10-year yield currently higher by about 18 basis points. A lot of fears, of course, about inflation, about the deficit, and you can see that being expressed right now. Not so much in the equity market, of course. The volatility index, the VIX, draining here. We are trading with a 16 handle. We were above 20 just a couple days ago, but a sigh of relief here. And then you take a look at gold. I highlight this because we have a real risk on rally, and we don't see any haven bids right now, at least if you take a look at the bond market. If you take a look at gold, currently lower, rather, by about 3%, Matt.
All right, so Donald Trump has won every single swing state and the popular vote to become the 47th president of the United States. He spoke earlier this morning in West Palm Beach, Florida.
We're going to make our country better than it ever has been. The task before us will not be easy, but I will bring every ounce of energy, spirit, and fight that I have in my soul to the job that you've entrusted to me. This is a great job. There's no job like this. This is the most important job in the world.
We head now to West Palm Beach, where we find Bloomberg's Stephanie Lai. And Stephanie, you know, I said earlier that he's the first Republican to win the popular vote since Bush won. It was actually George W. Bush who won the popular vote against John Kerry in 2004. But this is still really an historic beat. It's the first time in 20 years that a Republican's taken the popular vote in the United States of America.
You're definitely right on that. And just looking at some of the breakdowns from the votes that have come in yesterday, we're seeing a realignment of the Republican Party. Now, this is something that many strategists and operatives have been talking about for quite some time, that Republicans are pulling from working class Americans more so than Democrats. But looking at some of the votes that came in, that picture was painted last night. In addition, we've also seen from exit polling from several outlets that Black and Latino voters also flipped for Trump at increasing rates. And so all in all, that's to say that the electorate that voted in Donald Trump this time around is very different than 2016 and in previous cycles that we've seen.
Stephanie, we thank you so much for your reporting from West Palm Beach. That is Bloomberg's Stephanie Lai. And joining us now on set, Ralph Schlosstein, Chairman Emeritus of Evercore. His presence on Wall Street and Washington spans decades. Most notably, he co-founded BlackRock in 1988 after serving in the Treasury Department during the Carter administration. Very in tune with a lot of the dynamics of the economy that we're seeing even now. But first, let's talk about the implications here. This idea that you could see tariff policy very soon. You could see him off and running, according to Mark Zandi over at Moody's, who thinks that these policies can be put in place very quickly with immediate impact. Do you agree? And what would be the ripple effect?
Well, first of all, the two areas that he's talked a lot about, trade and immigration, largely can be done without legislation. So that means that they could be done fairly quickly and without any resistance anywhere in Congress. Take trade. this is not a novel statement. It doesn't matter whether the economist is democratically inclined or Republican inclined or independent. They all believe it's inflationary, and that the consumers ultimately bear the cost of significant tariffs. I think there are two ways you can look at the president. One is that he's going to unilaterally impose these, and the other is that he's going to use the threat of that as a negotiating tactic to get a more balanced trade relationship with some of the countries that aren't as balanced as we would like them to be. So I think it remains to be seen which of those two approaches he pursues.
Which do you think that investors should be prepared for? Because one of the explanations we've gotten for why tech is maybe underperforming this rally that we're seeing is because there's more China exposure. There's more international exposure. And if we do go down the road where, of course, this isn't a bargaining chip, that this is actually something that he will put into place, these very high levels of tariffs, obviously that could have big ripple effects on the U.S. stock market.
Yeah. Well, one of the remarkable things I think in Washington is I have yet to find a person in either party who will stand up and say, we need to be more fair toward China.
Right.
I mean, it is a universally held view that we need to be tougher from a trade and economic policy point of view. And regardless of what you think of that, I think that's just baked into the cake.
Although it seems that the Chinese would have preferred Kamala Harris, a Harris administration, right? They were more comfortable in a Biden administration maybe than they were in a Trump administration. Do you think that's wrong?
I have no idea.
No.
Really no idea.
You know, there's probably more to say about how companies could prepare for these potential tariffs here, both as it pertains to China as well as the European Union. But you mentioned inflation, and we're a day away from the Fed really telling us what the plan of action is here. What does this mean for the path forward? If you have a Congress now that is flipping quickly red, with the Senate certainly already and maybe even the House, then you would have those tax cuts as well. So where does the money come from in order to close the deficit?
Well, I think, sadly, one of the things that was missing from both campaigns in this electoral process was any recognition of the generally fiscally irresponsible policies that we have. And, you know, there's been analysis of what Harris's policies would have meant and what Trump's policies, which he articulated on the campaign, would mean. They are both increased the deficit, his more than hers. But here again, you know, in this area, you're going to need Congress. And I think at some point, there's still a material part of the Republican Party that does care about fiscal responsibility, and we'll have to see how that shakes out. Clearly there's going to be a very interesting discussion about taxes next year.
Well, and spending, though. I mean, do you not take seriously Elon Musk's proposed role in this administration? He has done well creating Tesla. SpaceX is a pretty good company, right? I mean, he's a serious man in a lot of ways. He's the richest man in the world.
You'd have to say that he's a remarkably successful business leader. He certainly is on the cutting edge of opinion. I don't take seriously his view that they can cut $2 trillion out of the deficit, because that literally is every dollar and then some away from interest expense, defense, and the Social Security and Medicare. I don't believe they're going to eliminate the government. It's not that easy. But I do think, look, there are clearly things that could be done, to make government more efficient, without question. And it doesn't matter whether it's local government, state government, or federal government. You look at the productivity increases that have come from the application of technology in the private sector world. Those have not been implemented anywhere to the same effect in government.
Right. And Ralph, we're lucky to have you for most of this hour. Before we take a break, I do want to talk a little bit more about the deficit, because in the last few months, the one touchstone that we've had is that the deficit's going higher no matter who wins, even if, of course, Elon Musk does have that pledge to eliminate $2 trillion.
Well, not if he does eliminate $2 trillion. They're the only ones who've talked about cutting spending.
Right. We'll see.
That's part of the deficit. Spending is a huge part of the deficit.
Okay. Federal budget projections, I think, is the most telling here, 7.5%.
In any case, the point being that it's interesting that we hear all of this concern about the deficit, but then you think about Nikki Haley, for example, actually articulating those fears and saying that she was going to do something about it. That just didn't resonate with voters. And I'm curious, how should investors think about the deficit? Is this an investable theme, or is this just a reality that we need to get used to?
I think this is one of these things that, as long as no one wants to be cutting spending or increasing taxes, that is a politically losing argument. And so I think what's going to happen basically is we're going to keep going along with this approach of, in my view, undertaxing somewhat and overspending, and it's going to end really badly, and then they'll do something about it. But it's going to end, and it's more likely, in my view, to end driving off a cliff than rolling down a hill.
Yeah, well, a red sweep, I suppose, could bring that, right? And we'll see.
You know, I think probably a red or a blue sweep could have had that effect.
Ralph, we're going to keep you with us. We're very lucky to have you here. Coming up, how world leaders are reacting to the U.S. election and preparing for a Trump presidency. We'll talk with Ralph about the congratulations that Donald Trump has gotten and those that he hasn't. This is Bloomberg.
All right, reaction is coming in from across the world to Trump's victory. And joining us with more on how global leaders are responding is Bloomberg's Rosalind Matheson. And Roz, walk us through around the globe. What are we hearing?
Well, it's a mixture of emotions really around the globe in response to this news. Obviously, the extent of Donald Trump's victory really has taken some leaders in some countries by surprise. All the polling has suggested it was going to be a very tight outcome that may not be known for days, if not weeks. And now, of course, grappling within a matter of hours with the reality that Donald Trump is going to return to the White House and what that means for countries around the world. Obviously, you know, for allies, they know that Donald Trump may view them as an ally, but also as a competitor. And so they're preparing themselves for an environment where it's going to be even tougher, even tenser when it comes to things like trade, but also security. In Europe, of course, there's the question of whether a Trump White House will continue to support Ukraine or push for a quick end to that war. And of course, an uncertainty about what that means for security on Europe's doorstep. You move out to the Middle East, of course, there's a conflict going on still between Israel and Hamas in Gaza, and obviously fighting going on in Lebanon. You know, does Benjamin Netanyahu leverage his relationship with Donald Trump to push harder there? Do you see a realignment in that region? And over in Asia, of course, the question of what it means for a country like China and fresh trade tensions there. So there's a mixture of emotions across the board around the world. Some countries and leaders will be welcoming the idea of Trump coming back to the White House, but there's also a strong sense of wondering what exactly they're going to expect come January.
Roz, maybe double down on the mixed feelings across Europe in particularly. Certainly, national security is a big issue. We just showed on screen some of the reactions from Ukraine's Volodymyr Zelensky as well as Israel's Netanyahu. But also going back to some of the other comments we've seen, looking forward to working with Trump across Europe, because we talk so much about those tariffs as it pertains to China, but Europe is where a lot of anxiety lies.
Well, that's right. So what you're seeing is the front-facing commentary, which is publicly very quick to congratulate Donald Trump on his victory, to talk about the relationships that these countries have bilaterally with the US, be it France or the UK or Germany. But behind the scenes, as I was saying, a lot of anxiety about what this might mean for both security in the region, but also on the trade front, because again, it's clear that Trump may, escalate the trade tensions with Europe. In his first administration, there was a sense of maybe countries in Europe finding a way to deal with him on that, to give him something in return. This time around, we can expect a more antagonistic response from Europe. If he's going to come for Europe on trade, Europe's going to come for Donald Trump in the US on trade. And so preparing themselves for the possibility of higher tariffs and then retaliation from Europe against the US in that scenario.
Roz, thanks very much. Bloomberg's Rosalind Matheson there talking about the international responses that we've seen thus far after Donald Trump won the 47th, becomes the 47th president. Still with us, Ralph Schlosstein, Chairman Emeritus of Evercore, a prominent Democrat, of course. And, I was going through, Ralph, what this means. And there are a lot more implications, I think, domestically than there are internationally. But there are massive international implications. I think first and foremost in Ukraine, where, a lot of people would argue, including former Secretary of State Mike Pompeo, that we need to do more to help Ukraine fight Russia. And it looks like Trump is going to be in favor of doing less. What do you expect?
Well, I think one thing that we can absolutely count on is that, the incumbent President Trump, when he comes back into office, will make policy as he sees it. He's not guided by a particular philosophy. I think I hope he'll be open-minded about Ukraine. I think Ukraine is literally an existential issue for democratic society and for Europe. And for that reason, we should care about it a lot, just like we should have cared about Germany in World War II and Hitler. But that's obviously for the new president to decide. I think there are two elements to this, the relationship, or three elements with America on the part of foreign countries, and particularly those in Europe. One is, we are by far the most powerful country, both from a military point of view and from an economic point of view. So all of our allies, care enormously about the policies of the United States, and in many ways are dependent upon the United States, particularly for on NATO and our alliances. The second thing is, they expect, even though they aren't equals from an economic and military point of view, they want and expect to be treated with respect, even if they aren't exactly peers of ours. And the third thing is that they want a policy that's consistent and constant, and obviously it has to adapt to the changing circumstances in the world, but where there's discussion back and forth and some element of collaboration. And I think it's on that last point where probably the latent nervousness is on the part of our allies, because the last time that President Trump was in office, he didn't always treat our allies with the same respect that they felt they deserved. And obviously in the position that we are, both militarily and economically, that makes life pretty tough.
Right.
For our allies.
Well, to that point, we had a great conversation with the German finance minister at the end of October, Christian Lindner, and he was basically warning Trump, don't start a trade war with the EU. And this is a question that I could have asked you in 2016. I'm going to ask it to you in 2024. Do you think that our partnerships, our allies, our traditional alliances, do they transcend any one president? You think about this, the relationship we have with the EU, for example, our traditional relationship with China. How much can they shift under any one president sustainably?
That's a good question. The president is the ultimate, arbiter or determinant of foreign policy. They have broad latitude in foreign policy. As a general matter, Congress has generally deferred to the executive branch on matters of foreign policy. So I don't think you can, even though it has been the case that there has been continuity from one president to the next and Democrats to Republicans and Republicans to Democrats, I don't think you can presume that that is the way it always will be.
I'd also love to mention that you're actually married to the U.S. ambassador to the UK as well. So a family that has a very close view on international affairs. And Ralph, you yourself have a very close view into corporate affairs as well, given your longstanding role at Evercore. When I talk to advisors across Wall Street, they tell me that companies have been preparing for this to a degree. They're preparing for nearshoring. They're prepared to move their supply chains. How much of that do you really see going on? And does it really spur a lot of corporate actions ahead, maybe M&A, to move things closer to the United States?
Yeah. I think there are two things that there's been a lot of work underway in the corporate world. One is supply chain simplification, nearshoring, onshoring. I think the COVID supply chain disruptions were a real wake-up call to many companies. If you think about the job of a CEO and a board, it's to mitigate risk, and they learned that that was a risk in their business. The second thing that I think there's, a pretty big pent-up demand for is mergers and acquisitions. I would say that many companies over the last 3 to 6 months have been thinking hard. One could say dusting off their dream deals, and so there's definitely a fair amount of that out there, and I would have said in any case that M&A this year is going to be stronger than it was last year, and next year is going to be stronger than this year.
Ralph, unfortunately, we have to go. Hold that thought. We're going to have much more on M&A coming up. That, of course, is Evercore's Ralph Schlosstein sticking with us. This is Bloomberg.
The Trump campaign pulling out victories in all of the key swing states, including Pennsylvania. We're going to head to Philadelphia now, where we are joined by Bloomberg's David Gura, and explain what we saw in the state overnight, because you saw many critical counties here have a margin of victory, even the ones that Harris was ahead at, smaller than what you saw for Biden. You really saw the tides turn over the night.
That is the key part of this story. Going to bed last night for as short a while as I did, we were looking at the counties around Philadelphia and at Philadelphia itself, kind of looking to see what the outcome of the election here was going to be. Was that going to be enough to buoy Kamala Harris here in this state? That didn't turn out to be the case. And as we look at those numbers at a more granular level, we see that the turnout that Vice President Harris got in Philadelphia was much lower than Hillary Clinton got back in 2016. So it represents this kind of colossal failure on the Democratic Party's part in galvanizing voters here who historically have been a real bastion of Democratic support in the Commonwealth of Pennsylvania. Pulling back a little bit, we were talking a lot about how varied this state is yesterday, how we've got, eastern part of the state having Philadelphia, having Scranton as well, pulling away to the west part of the state. We've got Pittsburgh, and between that, a really rural tract of the state. All very different places. And what we heard from the Harris campaign going into Election Day was, because of the magnitude of their ground game, how many people, how many resources they deployed here, a level of confidence that they were going to get those folks to the polls to vote Democratic. That did not pan out the way that they said they would. And I think in the coming days, there's going to be kind of a real postmortem of how the polling differed so widely from what we were hearing from the campaign about how successful they felt they were being, getting those voters to say that they were going to vote Democratic in the election.
David, expand on that ground game, because I think Philadelphia is a standout, really, in terms of the ground game. Elon Musk, of course, giving $1 million a day to someone who we thought it was winning a sweepstakes, but actually it's just, I guess they picked the person best suited for the job. And Elon Musk really funding and in some ways running the whole ground campaign for the Trump campaign. Did they outsource that successfully?
I think that is a very fair way to characterize what the Trump campaign did here, if not explicitly, implicitly. So we're talking about more than $100 million of investment, really, in the ground game in this state. And, you know, Matt, you and I talked in the last few days just about how much we knew about the Harris ground game, how much they talked about, how much money and resources they were deploying, and how little we knew about the Trump campaign was doing. Elon Musk didn't set up residence in this state, but spent a lot of time here in the lead up to the election, was really invested in putting that money to good use, getting people to come to the polls. And when you look at the playbook that he and the Trump campaign were using, it's very analogous to what we saw in 2016, the kind of voters that the Trump campaign was targeting, a lot of rural voters, a lot of men, trying to get them to the polls, hitting on issues that were really resonant in 2016, the economy chief among them. And I think, you know, there was a sense going into the election, was Donald Trump veering from what was a very concise and streamlined message, that being Kamala broke it, Donald Trump can fix it, but it seems like that broke through, that concise messaging broke through and really resonated with voters in this state.
All right, David, have so enjoyed your coverage over the past 24 plus hours. That is David Gura reporting live from Philadelphia. And still with us is one of Wall Street's highest profile Democrats, Ralph Schlosstein. He, of course, is the chairman Emeritus of Evercore. And before the break, we were talking, of course, about this big pipeline for M&A. And as such, we should take a look at Capital One and Discover, both of those stocks up mightily in the market right now. And you were making the point that, you know, a lot of companies might be dusting off their dream M&A plans. And as such, which sectors, which industries should we be keeping an eye on for when it comes to consolidation?
Well, I think, first of all, there's definitely a lot of pent-up energy interest in consolidation and in some cases in simplifying your business, you know, spinning off businesses that aren't necessarily core to your activities. So, you know, the biggest areas normally are tech, healthcare. Interesting to see what happens in financial services. We have, you know, more than 4,000 banks in this country. Most other Western and non-Western countries have a much more concentrated banking system. Industrials, a lot of repositioning of portfolios in the big industrial companies. They're very active. So I think and of course, energy, you've seen a lot of activity. So, you know, there are 5 or 6 sectors that all make up more than 10% of the M&A activity. And the last one, of course, is consumer, which is pretty consolidated already. But, you know, we are certainly seeing at Evercore, you know, we monitor a number of sort of leading indicators. You know, we keep a risk-based, risk-adjusted pipeline, which assigns probabilities to it. There's an unrisked pipeline and conflict clearances and engagement letters, and they're all strong.
So speaking of strong, also is your stock. If you look at Evercore stock, it really tracks with what you're seeing with a lot of financials, except for the rise you're seeing is the most since 2020. You're at a record high over at Evercore. And not only do I want to know about the return of deals, I want to know about how big they can get. The largest deal we saw this year was roughly $35 billion. We're hearing from some advisors that now that you have a new administration, potentially not as much pressure at the FTC, we could see mega deals again. What does a mega deal mean?
Well, mega deals are 50 billion and larger. And, you know, with respect to our stock, I always say, thank goodness we now have a CEO who replaced me who can explain the success of our company, and he's doing a really terrific job.
All right, so mega deals, we could see new records. I guess Lena Khan, are we discounting her? Because J.D. Vance was a fan, and I have to say, to me, one of the most interesting things is Donald Trump looks to be in very good shape. I saw him speak at the New York Economic Club, but he is 78. He's the oldest president that we've ever elected. And J.D. Vance is waiting in the wings to take over should anything happen, God forbid. What do you think about that, the possibility of J.D. Vance taking over as president? The potential.
I wouldn't want to wish any president ill health.
No,
So I
neither would
wouldn't
I, but
even.
remember when we-
So I wouldn't even speculate on that.
When we elected, I just think when we elected President Biden, a lot of people were saying this puts Kamala so close to the Oval Office, and now the inverse is obviously true.
Yeah, and I would assign a quite low probability to Lina Khan being kept by the Trump administration.
Really? Even with J.D. Vance's
Even
vote
with
of
J.D.
confidence?
Vance being there, yeah.
Well, it's interesting. I mean, assuming she stays, it seems like J.D. Vance's support of Lina Khan is more about the fact that he doesn't like big tech. And you think, again, about some of the sectors, some of the industries. I mean, is there really room for consolidation in tech when you compare that to a healthcare industry, when you compare that to the financial industry?
No, I would say what's more likely in tech is a greater open-mindedness about some of these big companies doing what are smaller bolt-on acquisitions, but that turn out to be, big businesses. Look at YouTube, look at
That's true.
Instagram. I mean, they were small deals when they were done, and they've become very, very big businesses.
So maybe not the mega deals that we're talking
Yeah,
about.
I don't expect that you'll see a massive,
In addition to mega deals, one thing we've seen a lot coming into this moment is spin-offs. And I want to use one example, for example. We saw CVS just soaring this morning with new expectations around what the insurance industry looks like and what Medicare plans look like. But this is a company, for example, that, just a couple of weeks ago, we were talking about potentially a company that could split up. And you think about that trend, do you think it just reverses? Do you think the big keep staying big, or do you think there's a need for companies to still break up?
Well, I think that there's an overwhelming trend of companies looking at their portfolios and separating what's core and what's incidental to their business. And, whether you look at GE, which broke up into 3 different businesses, and there wasn't, an enormous amount of rhyme and reason in having those 3 businesses together. And companies, management, and boards are being rewarded for doing that. Probably one of the more successful investment strategies has been to invest in the spun off companies, because having a company that's really focused on its core business has traditionally been a way of having, financial success.
Ralph, I have to ask you what went wrong. I mean, it's important, I think, because the pendulum is likely to swing back. We've had now 3 presidential elections in which the incumbent has lost, and that hasn't happened since the 1800s. So what did the Democrats do wrong?
I think, believe it or not, I'm old enough that I served in the White House under President Carter. So I remember vividly the last period of higher inflation. And, I've said a year ago that you cannot underestimate the impact that has. Unemployment is a horrible thing for the people who are affected by it and their families and their friends. But inflation touches every single person in the country, and they get an almost daily reminder of its presence. And, I think, quite honestly, the Fed, with the support of President Biden and Vice President Harris, has done a really excellent job of taking, of knocking inflation down. But the reality is, when you go to the store, milk is still 25% higher than it was 2 or 3 years ago. And that leaves a really bad taste in people's mouths, and it touches everybody in America. And so when you ask this, the question which gets asked in every election, are you better off today than you were, 2 or 3 or 4 years ago? That's very hard to win on that when you have a period of inflation.
It's such an important point. Of course, inflation, it's just kryptonite for the incumbent. Ralph, we have to leave it there. It was great spending so much time with you this morning. Great to get your perspectives.
Thank you.
Of course, a wealth of experience. And of course, is Evercore's Ralph Schlosstein. Meanwhile, let's get a quick check on the stock markets. We are about an hour and change into the U.S. trading day, and still a big rally on our hands. The S&P 500 higher by nearly 2%. You're seeing big tech fight back right now outpacing the broader index, the Nasdaq 100, up by more than 2%, but still, it's the small caps that are the star of the show. You see the Russell 2000 higher by 4.7%. Now coming up, we'll also talk about Bitcoin hitting an all-time high after this election. More on the outlook for crypto next. This is Bloomberg.
Let's get now to high interest to look at what's making headlines around the world. CVS Health reporting third quarter revenue that came in above forecast, but offered investors no guidance on its expected financial performance for the rest of this year and next. The healthcare company also announcing former United Healthcare CEO Steve Nelson will become the new president of the Aetna Insurance Unit. And Novo Nordisk is climbing after reporting surging sales of its blockbuster weight loss treatment, Wegovy. The results reassuring investors after rival Eli Lilly reported disappointing sales of its obesity treatment last week. We'll bring you highlights of Katie's interview with Novo Nordisk's CEO in just a few minutes. And shares in private prison operators like Geo Group and Core Civic are rallying after Donald Trump's historic win to become the 47th president of the United States. Immigration was a central issue for Republicans in the elections, and Trump is seen to have the harder stance on that issue. Sonali?
We're going to turn now to crypto because crypto fans are celebrating a Trump return to the White House. Gemini Trust co-founder Tyler Winklevoss posting on X earlier, quote, "We are on the brink of a new American renaissance." We're going to bring in Bloomberg Technology co-host Caroline Hyde to discuss it all. And I'm looking at standwithcrypto.org. This is where Fair Shake, the big crypto money, really came into congressional races across the country, in addition to watching the president in the House of Representatives. Guys, 253 pro-crypto candidates were elected, as opposed to 115 anti-crypto, 16 pro-crypto for the Senate, 12 for the anti-crypto part of Senate.
I've already
here.
lost track.
Yeah. it's an overwhelming push for crypto, is what I'm saying.
Yeah.
Ultimately, how does this make a difference? There's a lot at stake in Congress, actually.
There was a lot of money at stake. 180 million was given to the Fair Shake super PAC, coming from various members of crypto elite and crypto billionaires. But I think what they're at pains to say is this was non-partisan. They didn't want to take a particular view on whether it's Democratic or indeed Republican. It was whether or not you were pro-crypto or not. So for them, the key win was Sherrod Brown. Yes, he happens to be a Democrat. He's ousted over a course in that particular race in Ohio. He was on the banking committee in the Senate, and he was fervently against crypto. So a new crypto supporter comes in. What does this mean? It ultimately means that they think the legislative agenda will change. You will start to get policies coming in form of stable coins first and foremost. You're likely to get more clarity on how some of these securities are viewed. And no wonder, therefore, Bitcoin's at a new record high. And in fact, the liquidity and the movement within it during the election rose, because how else are you trading this as a retail investor? You're seeing volume spike higher. You're seeing ultimately more people trading this, but it's not just Bitcoin. It's Dogecoin, it's Solana, it's ETH. Plenty of excitement and exuberance that we are entering this new kind of view. Yeah, Doge.
And,
Department of Government Efficiency happens to have the same letters.
Yeah, there we go. Caroline, unfortunately, we're up against the clock. I have to leave it there. That, of course, is Bloomberg's Caroline Hyde. And coming up, of course, we referenced this, but we'll bring you part of my conversation with Novo Nordisk CEO following a blockbuster earnings report. This is Bloomberg. It's not all about the election, of course. It's earnings season, and you had Novo Nordisk reporting stunning sales of its weight loss drug, Wegovy, earlier this morning. I spoke with Novo CEO Lars Frogard Jørgensen earlier today on the company's results.
We're really excited about the growth we see. There's an underlying very, very strong demand. So many patients living with obesity who would like to have access to our medicines. And as we gradually scale up manufacturing and can serve more and more patients, that's really what fuels our growth. And we now have a situation where we are moving out of the drug shortage situation and will gradually ship more and more doses into the US market. And that's really exciting that we can not only demonstrate strong growth after 3 quarters of the year, but we can sustain that into fourth quarter and also into next year.
Well, Lars, let's talk a little bit more about supply, because you take a look at some rival drugs from Eli Lilly being taken off the FDA shortage list. What is your supply situation heading into 2025?
Well, it's one of a constant scaling. We have shown that over the past 3 years, we have tripled the volumes of products we ship to patients. So that's a very, very significant ramp we are doing. And looking at a global scale, we are close to serving 2/3 of all the GLP-1 products that's being shipped into the market. And also in the US, we see that we are now in a situation where we can supply all doses, and that means we are off the drug shortage list, and there'll be a step up in also the starter dose that will be shipping to the US market. And if you look at this year, we have more than doubled the number of total scripts in the US market from a level of around 100,000 to well above 200,000 right now. So that's a very, very strong ramp that we're very pleased about.
We had a U.S. presidential election yesterday. We have a result. Donald Trump is the president-elect. And I want to talk about what it means for you. You think about the Inflation Reduction Act, Ozempic, Wegovy. They were expected to land on the negotiation price list next year. Do you think that they still will face those Medicare price negotiations under a Trump administration?
Let me start by saying that I think there's a clear vote by the American population. So I appreciate that we have clarity, thinking back at last election where it was a lengthy process, and I don't think that was good for democracy. So a clear vote, I think, is good. And then, of course, now we have to look into what are the policies being proposed. And I think it's been a campaign with relatively limited specificity when it comes to actually what are the proposed policies. So we still await to see that. Yes, there's been some talks about the IRA, what will happen to that. Yes, potentially some of our products will be included in that, but it is still too early to tell. What really matters for us is that there's a government that's interested in innovation and interested in collaborating to find out how can we secure patients have access to affordable medicines in a complex U.S. healthcare system.
And that was my interview with Novo Nordisk CEO Lars Fruergaard Jørgensen earlier today. And of course, there were fears about what this report would hold. You think about Eli Lilly's earnings last week, a bit of a shock there when it came to sales of Zepbound, et cetera. But their U.S. sales for Wegovy were up 50%. So not exactly those fears coming to fruition. The comments on Trump were really interesting. Basically, he's in wait-and-see mode, and you have to think a lot of CEOs across the country are right now.
Well, for 2 reasons, right? If you're in the pharma industry, what it means for M&A, and also what it means for health insurance. And it was interesting to see what he said to you about Medicare and Medicaid, rather, for these companies, because you take a look at how they're moving today, and I mean, I think the short thing to say is people are going to get paid.
Yeah, the health insurers moving up bigly, to use one of Trump's terms, but Novo Nordisk specifically, they do have something to gain from a Trump administration, of course, if the semaglutide doesn't fall on the price negotiation list next year, but I don't know.
The shares, so Novo Nordisk shares were up 9% at one point today. And you could take that as the market cheering them on, not getting prices cut, right, in negotiations with Trump. On the other hand, if he's not going to expand health care or health care isn't going to approve these kind of things, I mean, if Elon Musk wants to cut spending, that's one place you could do it.
It's the election, but it's also the results. I mean, people want these GLP-1s. There's a lot of Matt Millers out there who are just desperate to get their hands on GLP-1s.
Yeah, because they could have so many potential benefits, staving off heart failure, Alzheimer's, and of course, keeping me slim. That would be great.
I was going to say, outside of weight loss is certainly an interesting thing. Now, coming up next, we're going to talk about big tech a little more, switch outside of pharma, talk about what happens next. This is Bloomberg.
welcome to our continuing coverage of election 2024 after an historic win for Donald Trump. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld.
And coming up, the Trump transition. Who's in, who's out? We're going to take an early look as allies and advisors jockey for a seat at the table.
Elon Musk's big bet on Trump, the Tesla and SpaceX boss, will now find out whether it pays off or he ends up getting burned.
And up next, the Fed takes center stage. Trump's victory raises big uncertainties for the central bank. Let's take a look at these markets at this Trump trade right now, still in full effect. You have the S&P 500 up 1.8%. The NASDAQ 100, big tech regaining its lead, at least over the S&P 500, up about 1.9%. Small caps in charge right now. The Russell 2000 up about 4.6%. What's really amazing to me is the volume right now, at least according to my screen. Volume more than 100% higher on the S&P 500 versus its 20-day average. You're taking a look at the cross-asset moves here, though. The bond market, it's been holding this sell-off all morning. The 10-year yield higher by 18 basis points. Volatility in the equity market cooling off a little bit, at least as measured by the VIX. And gold, not a haven bid to be found, at least for the yellow metal. Gold down about 2.5%, Matt.
Yeah, absolutely fascinating and pretty extreme market moves after that election, which itself was fascinating and extreme. Let's continue our coverage of the presidential win by Donald Trump. He delivered his remarks to supporters in West Palm Beach earlier this morning. These remarks came after it was clear he would not only win the White House, but his party was set to control the Senate as well.
I believe the greatest political movement of all time. There's never been anything like this in this country and maybe beyond. And now it's going to reach a new level of importance because we're going to help our country heal. We're going to help our country heal. We have a country that needs help.
Let's head now to West Palm Beach, where we find Bloomberg's Stephanie Lai. And I mean, the odds that this man overcame to win the presidential election, again, after having lost it, 4 convictions, 2 assassination attempts. They switched up his opponent mid-race. It's pretty impressive in terms of presidential victories, isn't it, Stephanie?
It is a remarkable series of events that we've witnessed over the last couple of months and perhaps even the last year and a half on this trail. Not only did he defeat, a dozen or so primary candidates in Iowa and had a resounding victory, everything that's happened since then would make you think that he almost didn't have a chance to overcome what was thrown at him. After the legal challenges and the assassination attempts, I think one of the things that the Trump team was very keen on doing was building sympathy among voters, to tell voters, look at everything that Donald Trump is being forced to deal with, all because he's just running to represent you. And I think that message really resonated with a lot of people. And it's something that time and time again, I would hear from voters on the trail, whether or not they were at a Trump rally. Something that really stuck out to them was how much news coverage Donald Trump had, and especially so, how much he was facing in that time.
Stephanie, we thank you so much for your reporting. That is Bloomberg's Stephanie Lai reporting from West Palm Beach, Florida. And joining us now here on set, Charles Phillips, a former Oracle executive who's now the co-founder and managing partner at investment firm Recognized Partners. Charles serves on many boards, including Bloomberg LP and American Express, and previously on many other boards, including Morgan Stanley, the Federal Reserve Bank of New York, Paramount. You have a very close view here of how the business community feels. You yourself was a very close supporter for the Harris campaign as well. How do people feel today? What changes?
Well, I think the market's up for a reason, and I think big tech will enjoy this because the regulation and all the prohibitions against mergers and acquisitions, people were complaining about that for the last 4 years. So you have a lot of small companies who can't go public, they can't sell out to a larger company, and they're kind of stuck. This will free that up. So I think the over-regulation aspect, business people will enjoy that part of it.
I wonder what you make of the rise in interest rates and small cap stocks. A lot of the, especially tech companies there, are not necessarily making a profit, so they need interest rates to stay low. You can't have those, as Katie pointed out, you can't have those stocks up and rates up at the same time for a very long period.
Something has to give. I think people are trying to decide, are the tariffs threats really real? Is it a negotiating tactic? Is it something that's rolled in slowly over time? And so the market is adjusting somewhat for higher inflation because of the tariffs. If that doesn't happen, maybe that reverses, you know.
I want to talk about the prospect of M&A, specifically when it comes to tech. We were talking with Ralph Schlosstein just a couple of minutes ago, and he said he's not really expecting mega deals in the tech space necessarily. Maybe you see some bolt-on acquisitions. What's your take? What should we be expecting?
I think it's the bolt-ons, but you couldn't even do that before. People were afraid to try it because you didn't know what the regulatory environment, how it would react to it. And I think with more certainty there, removing some of the players that are there right now, you'll see people start to wade back into the water again.
When we think about big tech in particular, one move this morning that we thought was very interesting was not just Nvidia rising, for example, or even Amazon rising to new intraday highs. It was also the likes of Intel. Yeah. Right? So, you know, when we think about the Donald Trump story to have American businesses onshore, who wins in that scenario and how much support from the U.S. government is given in pursuit to that goal?
Well, I expect him to continue to support the CHIPS Act. Bringing manufacturing back is a big theme. To his credit, he's been talking about that for a long time. But it probably helps the auto industry as well if he's going to put tariffs on Chinese making cars, EVs as well. So that's going to help all of Detroit as well.
What about consolidation there? I mean, Intel is supposed to get, I think, more than $20 billion worth of funding from the government. It's only a $80 billion stock at this point.
Used to be a lot bigger.
Yeah, I know. I mean, I'm not sure that Donald Trump is necessarily going to influence that, but do you see this speeding those kind of things up?
It makes it possible to have those conversations. Right now, before now, people wouldn't even think of that. It just wasn't worth spending any cycles or spending any money on it. And now you can at least talk about it with other people and see if what's possible.
I want to talk a little bit about something else that you said. So M&A, tech M&A, it sounds like it's coming back, maybe in the form of bolt-on acquisitions. But you said that those small tech companies, they can't go public. So maybe they'll see some relief through that valve. But why can't they go public? I mean, is there anything about this new environment where maybe you could see some of those companies actually come to the public markets?
Well, the IPO market shut down for several years. There was probably too much capital going after these small companies, and it just didn't work for a while. It may open back up, but you can't count on that. And a lot of them don't want to go public. It's like they built a company, they want to sell out to a larger company and go start another one. And all the regulations that you get when you go public, some people have learned they just don't want that. So the only outcome is we need to sell to a strategic. And if you're saying that's now possible, that's a good thing for everybody.
I want to ask you, in your opinion, what went wrong here? I mean, this is a candidate in President Trump who faced more adversity, I have to imagine, than any presidential candidate in history.
And
the Justice Department was after him, 4 indictments, 2 assassination attempts. Harris raised way more money than he did. I mean, how do you lose?
One, you have to give him credit. This is the biggest comeback since the '68 Jets. I mean, he did it, and much respect for that. And we need to get behind him if he's going to be the president. We all need to kind of line up and stop the fighting a little bit. But I think she had a tough time when in basically 100 days trying to redefine herself. Yeah. Nobody really knew her. 2, immigration and inflation, you got tied to her.
I still don't really know her because she didn't tell me what she felt on a lot of these issues. I had no idea, for example, what she thought of the state and local tax deduction. Stephanie Ruhle asked her directly, and she did not answer.
She put out a lot of policy papers on her website, but no one goes there. It was 84 pages. No one goes to read that, and she had a limited amount of time to do enough shows to get the word out.
Not Joe Rogan.
Yeah, she did. I'm sure people will be talking about that for years to come. 60 million people heard Trump and Joe Rogan, and he reached a lot of men, which is where she was weak. I think it's hard to be the candidate of change when you've been, the vice president for 4 years and people want to change. They wanted someone who could implement it quickly. That means you want a strong man. So he had both those things going for him.
So maybe not reaching the demographics that she needed to reach. I am curious how you think the fact that we didn't have a primary for Kamala Harris factored in here. It was a very unusual campaign, a very compressed campaign, as you pointed out. But the fact that, she didn't go through the primary process, how do you think that factored in?
Well, I do think primaries make you a better candidate, but this was an unusual situation. Even if we had a primary, it would have been truncated to a week or 2, maybe. So I'm not sure that would have solved the problem. And who knows, the country just may not have been ready for a black woman to be president. We had that factored that in. There were some people who wouldn't vote for her. But I thought she did an amazing job for the task that she had. She had a limited amount of time to get, put policy papers out, get organized, raise a lot of money. That was tough for anybody to do. If you say no one knew this person 4 years ago and Trump's been in the public eye for, what, 3 decades?
Yeah.
That's a hard comparison.
You know, it's interesting. When you sat down, we were talking about how the market has just been ripping, right? And you were a Harris supporter.
Yes.
And wondering what you think now comes of the Democratic Party. You have the Senate turning red, the House on the line, the White House red, the market reacting to Trump as the pro-business president at this juncture. You still had record highs in the S&P 500 under Biden, but the narrative has changed. Pro-business, red party. How does the Democratic Party, how does the Democratic Party change the narrative around that, given so many concerns about the business crackdown, the M&A crackdown that has permeated through the last couple of months?
This is going to force some reflection on the party and probably result in some change in 4 years. People will learn from this because they don't want to keep losing. I think if you go on the Democratic website today and say there's a page that says who we are, there's 17 people there. It's all about people of color. It's all about women. There's no men there. There's no black men there. And so you have to talk to everybody. And so you have to expand the base on who you consider a Democrat. The rural areas are just as important as the cities. We can't win just with the urban areas. So we just got to rethink how we go about this. And I think that conversation is going to start today.
Charles, you're sticking with us. We're just getting started, of course. That is Charles Phillips of Recognized Partners. And coming up, a win for Donald Trump. It also means a win for Elon Musk. We'll take a look at the latest surge in Tesla shares next. This is Bloomberg.
After Donald Trump wins the election to be the 47th president of the United States, Elon Musk's big bet looks like it's paying off. Tesla shares surge as investors wager the EV maker will be a major winner when Trump returns to the White House. And as Katie pointed out earlier, Rivian shares, his big competitor, are down, or his small competitor, I should say. Bloomberg's Ed Ludlow joins us with more. Rivian, obviously not a huge competitor to Tesla. They kind of own this lane, right, in terms of EVs, Ed. Is his $130 million investment going to start paying dividends right away?
Yeah, I mean, the immediate reaction of the shares is largely just by association between Elon Musk and Donald Trump. And, you know, overnight, Musk has been speaking about sort of the work that he did on the Trump campaign's ground game, you know, kind of taking responsibility for it. You know, the consensus among industry experts, forecasters, is that Trump's policy platform may impact existing policy for electric vehicles on the incentive side or support for manufacturers negatively, right? Repeal what some of the legislation, you know, allows for. But many see Tesla as well positioned, frankly, A, because it's a pure play name, but also because those incentives are allowing the rest of the field to catch up. And I think you showed the shares of GM and Ford as kind of split automakers, as well as the other pure plays like Rivian.
And I want to talk about Elon Musk potentially in the Trump administration, what that would mean for Tesla. Of course, he has his hand already in 6 different companies. He is a more distracted, more divided CEO than most. But I feel like him potentially entering political life, that's a whole different story here, Ed.
That's a reasonable summary. You know, I spent all night on the phone and, well, actually, first of all, what I should say is I've written to the boards of both Tesla and SpaceX to just ask, what's the plan? Have the boards of both of those companies met to discuss whether Elon Musk remains in post? Think it's a reasonable thing for me to have asked them, haven't heard back. But what I've heard from sources is that the assumption is Musk will take on some kind of advisory role rather than a sort of permanent, fixed and official federal role, you know, in DOGE, Department of Government Efficiency. And he'll continue as the CEO of Tesla and SpaceX, and he's demonstrated for a long time he is able to do that. But I think there's still a lot of questions about the technicalities of like how that would work.
Ed, thanks so much. Really appreciate your commentary on this historic day. We're bringing back now Charles Phillips, a former Oracle executive who's now co-founder and managing partner at the investment firm Recognized Partners. He serves on many boards, including our board here at Bloomberg LP, as well as American Express. I wonder what you think of the West Coast billionaires getting in on this election. I mean, Elon Musk giving $130 million to Donald Trump is one thing. He has hundreds of billions, so he can do it. You know, but Peter Thiel also kind of helped to create J.D. Vance. It's not unusual for very wealthy people to buy themselves a place at the table, a seat at the table in administrations. But what do you make of this?
That happens on both sides, though. And ever since Citizens United, we made that a right for everybody to do. You can express yourself, and it's unlimited. If we want to change that, we can change it. But I don't see any. There's too many people who are profiting from that for it to change. So this is a big industry. Every 4 years, media companies profit, and everybody else, and so that's going to continue.
To the extent it continues, in this round at least, the people who are putting money in the races are affiliated with a different type of technology. It's artificial intelligence, even when you come down to Elon Musk and XAI. So what role is that going to play?
And Thiel, right?
Yeah, exactly.
Yeah.
What role is that all going to play in the new economy here? And frankly, what are the ripple effects? Because it will impact jobs. It'll impact energy consumption. It's just pervasive.
Well, AI is going to happen whether we have a policy or not. So you'd rather have smart people around him advising him on how to implement AI, the best places to use it in the government and in the military, and what's the right policy for it. And so if we don't do that, it'll happen without us or in other countries. And so it's not a bad thing to have technology people around him.
Yeah, and I'm curious how you approach AI as an investor. Of course, recognize it's a private growth equity firm. You take a look at technology, you take a look at software. AI has been the talk of the town in markets for 2-3 years. At this point, what opportunity set do you see there? How do you filter out basically hype from reality?
That's the number one questions our LPs ask us, because we invest in a lot of software engineering type companies and technology services. Which things will get automated and which things still need people involved. And so for every investment, that's the number one question we start with. Does this accelerate the business, or does it replace this business? And the good news is, I think the things that it accelerates much more than the things that it replaces. That's the history of technology. It takes a while to get going. I know everybody keeps saying, where are the use cases? We've been waiting and waiting and waiting. That's the way these cycles work. They take a long time to get started, but then they're much bigger than you ever imagined them to be. So this is going to play out over many years. We're excited about it. It's an investment theme that we have right now, though.
Speaking of investment themes, one thing we were talking about a little earlier on this program, you saw small cap stocks. Yes, they were rallying. They have been rallying. But the large caps here, they are jumping off of a larger base. You now see Palantir at another record high. You see American Express at a record high as well. You're seeing this across sectors for these really large companies here, and it can't be ignored. When you think about the marginal impact here, the difference that a red Senate, maybe a red House, and a Trump White House means, what industry is going to feel it most?
Hard to say one specific industry, but pharma probably is one. Just healthcare in general. We think big tech, like I mentioned before, the auto industry, and so almost every industry will benefit from a lower tax rate, at least potentially anyway. And then the proposal to raise taxes on buybacks, that's probably not going to happen now, so that's also a positive. So there's a lot to like in terms of, if you're a business person, that's your main thing. Lower taxes, better capital gains tax rate, dividends are going to be easier to do, on and on and on. That's why people voted for them.
I wonder what you do, or what companies do. You obviously are essential to the way a lot of companies, and the big companies in this country, run. How do they prepare themselves for an incoming Trump administration, if that's possible?
That's hard to do, because it's not always certain which things were said to fire for effect. This is just an idea I have versus this is what I'm actually going to do. You'll have to wait and see what things actually get implemented, and that's over the next 3 months. That's what people will be focused on, trying to get a sense of it. It also depends on who he surrounds himself with and what the priorities are and how he's advised.
What about when it comes to tariffs? You think about, of course, taxes. We talk about the corporate tax rate all the time. Tariffs, as we understand it, I mean, he doesn't need Congress to do that. That can just sort of happen. And you think about the tech industry, the relationships with China, for example, and you think about some of these chip names. I don't know how you begin preparing for that.
Yeah. The likelihood of a 60% tariff on all Chinese products and 20% on everything else on $3 trillion worth of goods, that's unlikely to happen quickly. The more likely scenario, it'll be measured over time, roll some tariffs in and be more thoughtful about it. If you did that right away, that's immediate inflation. That's a sales tax on everybody. The goods that we're importing from those countries, we don't have, products that replace those here. And so what are you going to do? They're going to raise prices and pass it through to the consumer. So I don't think that happens right away.
Charles, we thank you so much for being here in studio, of course, after a very long night. That is Charles Phillips of Recognized Partners. We have more on the markets up next. Please stick with us. We have many stocks at record highs, and of course, the markets rip-roaring, the bond market selling off. We'll show you what's under the hood next. This is Bloomberg.
Welcome back to our continuing coverage of election 2024. Let's take a check on this stock market right now, ripping higher across size levels. You can see the S&P 500 up by about 1.9%. Big tech also getting in on the action. Your NASDAQ 100 higher by about 2%. Small caps is where it's at. It's the Russell 2000 leading the chart here, higher by about 4.6%. Just a fantastic day for those small companies, heavily weighted, of course, to financials, to healthcare. Some of the sectors really seeing a bid today. Let's take a look cross market, though, cross asset, because that's where a lot of this action is. You can see the 10-year yield holding its sell-off when it comes to the bond market, up about 18 basis points on that 10-year Treasury yield. I am so excited to see that 30-year auction later today. We talk about bond vigilantes all the time and the sell-off that we're seeing. But if we see decent demand at this auction coming up at 1 p.m., maybe we'll come back a little bit.
Yeah, I haven't looked forward to a Treasury auction in my entire life.
We had one yesterday, and that's why you saw yields reverse.
I think it is fascinating to see these moves, and it'll be fascinating to see if this market still has concerns about inflation. At the top of the show, Jay Hatfield said he doesn't think we're going to see inflation. And we've seen a couple economists say the same thing, Livornia for one. But I think it's important to point out that Donald Trump won every single swing state that's been called. He won the popular vote, the first time a Republican's done that in 20 years. This is certainly an inflation problem. Inflation is probably kryptonite for any president who's in office. But also it looks like a resounding rejection of immigration and woke policies from the Biden administration.
And soul-searching indeed on whether that move in the long end of the curve is indeed inflation fears or something else. Coming up, we're going to talk more about that Trump trade rallying across markets. This is Bloomberg.
Welcome back to our continuing coverage of election 2024. Let's take a look at the stock market. Of course, we've been checking in on that big rally, and it's still underway, and it's still gaining momentum. You take a look at the S&P 500 up by 2%, NASDAQ 100 up by more than 2% at this point, and small caps firmly in the lead. It's the little guys that are the biggest winner today. The Russell 2000 up about 4.6%. Let's take a closer look at this Trump trade that's been sparked in the wake of the election, but has been building for weeks. We're going to do that with Gina Martin-Adams. She is Chief Equity Strategist over at Bloomberg Intelligence. Great to have you on set. Of course, it has been a busy week, a busy 24 hours. And you take a look at the stock market, it feels like we've been talking about the Trump trade reappearing for weeks, especially in the bond market, but particularly in equities as well. You could have made the case that maybe a Trump win was priced in, but clearly that trade has more juice.
Yeah, I mean, I think what's really happening in the grand scheme of things is stocks very typically are following a seasonal pattern. They struggled in October. They typically struggle in October of election years. And then once the election is over, you get a nice bounce. And that's exactly what we're getting. I think the thing that really surprised people is that we have an election result so fast.
Yes.
And so you're getting the bounce even faster than many people had anticipated. But you very typically get very strong seasonals coming in November and December. Post-election year seasonals have been somewhat suppressed recently by a lot of uncertainty with respect to elections, but this is a very certain result, and it's getting priced in pretty quickly.
Yeah, not just so fast, but also overwhelmingly. Yeah. I mean, you know, usually we would complain about the Electoral College being outdated, but he won the popular vote as well, so we can't really do that. I wonder how many investors, because the broadening out trade I think is interesting, the rotation, especially in small caps. We've been highlighting that they can't be up forever if rates are up this high forever. But I wonder if part of that is just that investors are already so invested in the Mag 7 and the S&P, like there's nowhere else to go.
Right. I think that's part of it. There's a little bit of pent-up demand for small caps. There's a presumption that tax reform, which does appear to be top of the Trump agenda, is likely to impact or help aid small caps recovery more than large caps, which I think is largely correct. So small caps have some sort of, I would say, pent-up aggression that's being worked out in the market right now, and they are the higher beta.
Most of them lose money, right, GM?
Well, less than you think. Like 40% of small caps were unprofitable back in 2021. About 27% are unprofitable today. Long-term average is about 35%. So the small cap index has gotten this bad reputation, if you will, as being unprofitable, uninvestable, nobody loves it. And now it's getting some love. It is high beta. High beta stocks across the world are going to lead when you have big rips in the equity market.
Katie loves it. Katie loves it.
I mean, it's absolutely fascinating, and she's absolutely right to keep an eye on it. I do want to move back to the large caps as well, because one thing you had mentioned was, you know, the only thing that is an near certainty, I guess, at this point is those tax cuts.
Yep.
And if we think about those tax cuts, how do you calculate what it means at the end of the day for EPS, especially for these big companies?
Yeah.
Is it baked in right now to the valuation?
It's a great question. There is no evidence that tax reform is baked into the individual equities in the S&P 500. We actually run low tax versus high tax baskets. The low tax companies have been dramatically outperforming high tax companies. So at least at the company level, there's a lot of room for potentially higher taxed entities to improve quite a lot. And you're seeing a bit of that today. When we look at the dynamics of tax, I think there is still a lot of uncertainty out there. Will we actually get what the Trump campaign has been suggesting on the campaign trail, which is a 15% corporate tax rate, recovery of all of the special considerations that were in the Tax and Jobs Act of 2017? We don't know if that's even possible in today's budgetary environment. What does seem very likely is at least a recovery of the expirations that were likely to happen through the end of 2025. What does that mean? We estimate it's about a 3% bump to EBIT, and I'll work through the mathematics of that. Prior to the Tax Act of 2017, companies were paying 19% of EBIT in the S&P 500 to tax. After the act, we got down to a 14% rate. So you had a 5% decline in the amount of tax paid as a share of EBIT in that experience. As part of those reforms have expired over the last several years, we've gotten back to a point where companies are now paying 17.5% effective tax rates. So could we get back to 14? Absolutely. And so that's our best guess is with reforms in this current budgetary landscape, we're not likely to get to a 15% tax rate. We more than likely actually just go back and get another 2017, which gives us about a 3% bump to the S&P 500 as a share of EBIT.
Well, you make a great point. Of course, we need to see what actually goes from campaign promise to actual policy. A lot of question marks there. Let's talk about what we do know. And we know that it's still earnings season. And I actually love this note that you had out the other day that so what if earnings are great? You have valuations getting in the way here. Valuations don't seem to be top of mind this morning.
Not at all.
Of all mornings. But how do you see that interplay, that dynamic working out between valuations and still strong earnings?
Yeah, this is going to be really interesting going into 2025 because the primary driver of valuations is a combination of just general animal spirits, risk tolerance, the longer term outlook for earnings growth, and of course, Fed policy and interest rates. So you've got to question, how much of that is going to change with this new administration going forward. If we really do have much stronger growth prospects that do emerge as a result of tax reforms and the like, what does that do with the Fed? Do we suddenly not have as many cuts coming from the Fed in 2025 as the bond market had formerly anticipated? So we're going to have to work through that. What I think is happening in earnings seasons, and this happened last season as well as this season, is earnings responses are great until the tech mega caps start reporting. And then nobody's happy because the tech mega caps are trading at such extreme valuations that they can't possibly satisfy market implied expectations. They're beating analyst forecasts, across the board beating analyst forecasts. But that's just not enough because their multiples are so high. So when I talk about valuations getting in the way right now for the earnings season, it really is about tech. But longer term, I think it's going to get a little bit more complicated than we were anticipating just a month ago without this election result.
Gina, thanks so much for joining us. Gina Martin-Adams there from Bloomberg Intelligence. Coming up, we're going to take a closer look at Elon Musk's businesses and how his role may change under Donald Trump. Remember, back in 2016, you had a bunch of Wall Street bigwigs cash out of their portfolios and get a huge benefit when they went to work for the federal government. Could that happen again? This is Bloomberg.
The Trump team can now begin to assemble as many of his closest allies look to gain a spot in Trump's cabinet. Bloomberg senior editor Wendy Benjaminson joins us now in Washington. Following the transition, very much a lot of posturing out there, and there have been so many names, particularly those that have also been close to Wall Street. You think the likes of Scott Bessent, you think the likes of Jay Clayton even, who has served in a Trump term before. How do some of these potential future candidates really stack up against the candidates that are in Washington as well, and what it means for policy ahead?
Well, you know, it's all an open game now, and let the posturing and the jockeying and the, you know, favor calling in games all begin now. There is the Trump transition team is led right now by Howard Lutnick, who is the Cantor Fitzgerald CEO, as we all know, and he right now is in charge of personnel, while Linda McMahon, who was Trump's Small Business Administration head, she is in charge of policy. One thing to remember, though, is you're going to start seeing all these names out there, like the ones you mentioned and thousands more, that there's only one person who matters in this decision-making, and that's Donald Trump. Because if you remember in 2016, Chris Christie was running the transition. He came up with a lot of very traditional names for Trump. Trump fired him and started over. With Mike Pence running the transition. So it's going to be a crazy couple of months, but we should start seeing serious names for positions like White House Chief of Staff, which doesn't need Senate confirmation, and then Treasury Secretary and Secretary of State. Those positions are often filled before Thanksgiving after an election so that allies and markets have some sense of what the future holds.
Well, let's name some names. I mean, Sonali mentioned Scott Bessent, for example. His name has been floated for a while. You think about the likes of John Paulson as well. But who are some of the other contenders here that we should be keeping an eye on as they seek to fill the bench?
There are just so many, and none of them are serious enough that, you know, I frankly feel comfortable going into their names. The names you mentioned are popular names out there. Howard Lutnick himself is a popular name out there. You know, there's any number of people who might take these jobs, but right now it's all just a parlor game and speculation.
All right, Wendy, thanks so much for joining us. Bloomberg's Wendy Benjaminson in Washington, D.C. Probably hasn't slept a wink, so we thank you for your coverage. Let's dive into one person in particular who may very well work in the next White House, and that is Elon Musk. For more on that, we bring in Bloomberg's Max Chafkin. He is a co-host of the very popular podcast Elon Inc. And Max, I was just saying before, you know, it'd be interesting if Musk were to take a role in the government, and like many people in the past, Hank Paulson and Gary Cohn and others, he may be able to sell then his holdings in Tesla without paying capital gains tax. That would be a great way for him to save a lot of money. Or do you think that's not really on his mind?
That would be quite a sort of 3D chess sort of move. I am skeptical that selling a lot of Tesla stock is a big motivator here for Elon Musk. His ownership of Tesla is so big that I think unloading it would create issues for the stock. It would also create problems for Elon Musk's net worth. I think there are a bunch of reasons why he's not going to want to do that. He's going to want to keep his stock and try to figure out a way to have White House influence that doesn't allow him to back away from these companies. And that is going to be tricky, you know, because obviously there are, you know, ethical considerations of a sort of, if he's going to start cutting government departments and he's a giant defense contractor, that starts to create some questions.
So one question I've gotten from a few viewers already this morning is, does Tesla then face key man risk? I mean, I suppose you could have asked the same question when he went to run X, right? And of course he runs SpaceX and the Boring Company and the Neuralink Company. And so, but if he's working for the government, does that bother Tesla shareholders, or are they happy about it?
Any more key man risk than it already faced? Like, Tesla obviously faces key man risk. It's just, I don't know, the key man risk is already so high that I don't know that this changes. You look at the way the market is responding, you know, the stock has gone way up. The last I checked, it was up like 13%. You know, that is like a lot of money to Elon Musk's net worth. When you look at this, you know, he maybe spent something like 185, maybe $200 million on this election effort when all's said and done, he's gonna have done very nicely, and I don't think he's gonna want to stop that. I think his hope, as he's signaled, on the campaign trail, is that Donald Trump is going to make a bunch of policies that are going to make these companies even more successful, that he is going to play a role personally in the Mars program. So I don't think we should expect him to take some kind of formal role. No, I definitely don't think it'll be a role that requires Senate confirmation. I think it's more what Wendy's saying. It's he's going to have the president's ear, which I think what we learned from the last Trump presidency is that's maybe the most important thing. That may be more important than any particular job you hold or whatever your official policy portfolio is.
So we talk about Elon Musk in the context of Tesla, obviously, in the context of SpaceX, for example. Let's talk about him in the context of X, because for better or worse, I feel like X played a role here in this election.
Yeah, I think for me, this is one of the big takeaways. For several years, people have been talking about X in very narrow terms. We've been looking at Fidelity writing down its value basically every quarter. Its value has, on paper has fallen by something like 80%, if you look at what third parties are saying. I think you have to look at this as a very successful acquisition, not in terms of business terms, perhaps, because X's revenue has fallen, their user base has kind of been iffy, but in the sense that this has become a vital platform on the right. This is how the political right in the United States and the people who affiliate with that are consuming their news. It's how they're organizing. It is the, whatever people talked about after 2020, what's going to be the new Fox News for the Trump world, because Trump was beefing with Fox News. I think this is it. This is the media arm of the MAGA movement, and that is potentially a valuable thing and also a politically significant thing.
I want to actually go to Starlink. Speaking of the many parts of Elon Musk's orbit here, you have a closeness to the president. You have a very fractured world as well. You have Starlink playing a critical role in other countries. How does Trump's relationship to many of these countries change perhaps Elon Musk's presence globally?
Well, I mean, what Starlink needs is more customers. Starlink is Elon Musk's internet service. It needs customers. It needs to sell a lot more of these subscriptions to regular people. It also needs defense contracts. And Trump can help with both, because Elon Musk has been trying to pivot Starlink more into kind of a service provider for the U.S. government, someone who could sell, say, the Air Force satellite connectivity or perhaps an ally's army or Air Force or whatever. And then you have the prospect that the U.S. government could subsidize Starlink connections in rural areas. This was a thing that Elon Musk was really fixated on early on. He kind of struck out during the Biden years, and I think it's a really good bet that will change under whoever Trump picks to run the FCC.
Max, really quickly here, of course, Elon Musk, Donald Trump, a lot of happy noises right now, the best of friends. How long do you think that will last, though? Because Elon Musk and Donald Trump, they've had a hot and cold relationship over the years.
Well, and just, in terms of their character, they both seem like men who like to occupy the most important spot of the room. You sort of wonder how long can they kind of coexist. That said, Elon Musk yesterday, before the victory party, and the thing that everyone was focused on, which was the Trump election, said he is going to spend in the midterms. He signaled that he will be trying to elect local officials, trying to elect senators, congressmen, or whatever. And so he is going to be a big donor to the Republican Party going forward. And that gives him some leverage over Donald Trump. I don't think it's likely to think that Trump will just sort of take the money and run. I think he sees Musk correctly as an important ally, as a media ally, as a celebrity, as arguably the most important spokesperson who's not Donald Trump for the MAGA movement. And so I don't think they're going to break up. I think where the rubber meets the road is when Elon Musk suggests something that is politically unpopular, which he almost certainly will, because he likes to push the envelope, and I think that is where there may be some tension.
And to your point here, he has a large platform via his media company, X, and a lot of money in those down ballot races, maybe just as importantly. Max, thank you so very much for all your reporting. That is Bloomberg's Max Chafkin. And Trump's victory raises big uncertainties for the Federal Reserve, and tomorrow the central bank is expected to cut interest rates at least 25 basis points. Traders, though, are paring bets on the Fed's neutral rate under Trump. Bloomberg's Michael McKee has all the details.
Well, that's right, Sonali. The people on Wall Street are seeing what everybody else is seeing, and that is that Donald Trump's plans are very uncertain. We know in broad terms what he wants to do, but he hasn't given enough details to model anything out. So the Fed doesn't know what's going to happen. And so what you can expect tomorrow is a statement that says, We've cut interest rates by 25 basis points. We don't know what's going to happen next, and we will ask Jay Powell over and over and over again what he thinks of the Trump economic plans, and he will say over and over again, we don't have enough detail. We'll deal with detail when it happens to affect the economy.
We do know what Treasury yields are going to look like, right? Because we see right now that the 10-year is basically at 4.50, and the 30-year long bond dropped. The yield jumped and the price dropped the most since 2016. So how much of an effect does that have on the Fed's view?
We got to see how long that lasts, Matt. If that continues, then it is obviously going to affect how the Fed thinks about it. But it's kind of binary. One path is that the interest rate goes up as it has because the markets think that the Trump plans will be inflationary, and that slows the economy, and the Fed may want to cut rates. But if it's also inflationary, they may want to raise rates to bring down inflation. So they're kind of stuck at this point, waiting for the details and to see how it is applied. In 2018, the Fed staff did a study on the Trump tariffs then and said they're probably going to be inflationary, but the best thing you can do at the moment is look through them because it's a one-time rise in the price level rather than an ongoing threat of inflation.
All right, Mike, thanks so much for joining us. Bloomberg's Mike McKee on what I would have to say again is a pretty historic day. The 47th president is elected with all the swing states that have been called and the popular vote. We'll talk more about what this means for the markets and what this means for the country next. This is Bloomberg.
All right, this is continuing coverage of election 2024, and we've been all about the markets these past 3 hours. Let's take a look at them now because, boy, do we have a rally underway. As we keep telling you, you take a look at the S&P 500, which I assume will show. There we go, up about 2%. Big tech, remember, guys, of course, that had been the laggard, not anymore. Now it is solidly mid-pack for the NASDAQ 100, up about 2.2%. The small caps, man, the Russell 2000 up 4.7%. But I think about the conversation we were having hours ago with Alex Semenova about how sustainable that small cap rally can be when you have the long end of the Treasury curve just screaming higher here.
I was thinking the same thing. Big bond sell off, but we have not hit that 4.5% level. Interesting to see those large caps come back. A lot of questions about those tax cuts. Gina Martin Adams, a lot of good color on what that would mean for EPS boost next year if they get it. And we'll see what the House does. That will mean something or another.
Yeah, I mean, the market, though, is clearly assuming with this Treasury move that Trump is going to put some tariffs into effect, and that is then going to result in inflation. And I think that's the big question, right? What kind of tariffs is he going to put into effect? Right. He can do that without Congress. Also, what kind of tax packages legislation he's going to push through. And immigration policy, I'm not sure how much he needs Congress for that. Some of that he can do on his own as well.
What goes from a campaign promise to an actual policy? Those are the questions that we're going to be asking up until January.
Another thing for certain today, though, volatility is actually a lot lower. So orderly disorder, if you will, in the market as we see it melt higher.
And we have yet to see a concession speech. So we'll wait for that from Kamala Harris. It is planned now for 4 p.m. this afternoon after Donald Trump won the popular vote and enough electoral college votes to become the 47th president of the United States. This is Bloomberg.